Welcome to the HU Move Makers podcast, where we highlight folks that are blazing the trail and making moves in Howard culture. Hello and welcome to the HU Move Maker podcast, where we highlight folks in Howard culture that are making moves and setting trends in the world. Today, we have a very special guest, Vista Equity Partners, 74 billion with a B. The largest tech software private equity firm in the world. A lot of syllables in there. And guess what? They're black owned. Capital and Partner Solutions Engagement. JP Morgan Asset Management. This brother went to Duke, but he got that foundation on the yard at Howard.
No doubt.
Mr. Julian Bostic, and he's joining us from the sunny side of the West Coast. So, Mr. Bostic, thank you and welcome to the show.
How you doing, Josh? Good to see you. Good to be with you.
Yes, man. Thank you so much. How does it feel to, man, every day you go to work, you're a part of history? I mean, I'm a black-owned businessman. I'm happy with my 4 employees. You guys got 70,000.
Whether it's 4 or 40,000, man, it's all good.
Yeah. So tell me about your career path. I know you did work at JP Morgan, Neuberger Berman. Am I pronouncing that right?
Yep, that's right. That's right.
So tell me about your career path. I mean, we don't see too many people like us at a high level, in this position. I mean, I watched the show Billions, and that's about as far as I get. So tell me how did you get to be the man?
Oh man, I appreciate that, brother. I'm far from the man, but I'm happy to at least share my path and my journey if you think that's useful for your audience. Let's see. Gosh, let me go back. Born and raised in Miami, Florida.
Oh wow! Nice.
Went to school, as you know, at Howard. Some of the best years of my life. Hanging out on the yard. I played football there. Was a marketing major in the School of Business. Developed some of the most amazing and lifelong relationships and friendships. Learned a lot. Then I went to work at a firm called GE Capital, where I began my career on the corporate side, and did that for a number of years. And wanted to go back and get my M.B.A. So as you noted, I went to Duke for business school. I was there for about 2 years and had a great experience there. Again, met lots of great people. Really enjoyed that experience. And then, like many, of my classmates, and I finished in 2002, by the way. I finished Howard in '95 and graduated from Duke in 2002.
Nice.
And like many of my classmates at the time at Duke, the thing to do was to go to Wall Street. Was to basically begin your career after business school into finance. And so graduated from Duke, went to New York and worked at JP Morgan, first in the private bank for a number of years, about 3 to 4 years, and then transitioned my career into asset management.
So the private bank, that's where you started? I worked for Chase Bank. That was one of my first jobs, but obviously we were on two different tiers. I was in the retail center trying to get people to get checking accounts, and
and that's the bulk of the money in the bank. So
that was the hardest job I've ever had.
I can imagine.
But my girlfriend at the time worked in private client, and her check was a lot bigger than mine. But anyway, go ahead.
No, this is much more interesting. You tell me about your experience. So real quick, I worked in the private wealth management business at JP Morgan. Began as a vice president and continued to kind of work my way through the system. I wound up transitioning to something called the asset management business, which is we were managing money on behalf of very large institutional investors. So think Texas Teachers pension plan, or think AT&T's pension plan, or Microsoft. Those are some of our clients. I did that for a number of years. I was responsible for capital raising and business development, and got recruited by a firm called Neuberger Berman.
Okay.
And Neuberger was actually the old Lehman Brothers, just a different version
Really?
of Lehman Brothers, very different version.
What did you were you kind of hesitant to make that move?
That's a good question. I wasn't, because, gosh, that was 2014 when I joined Neuberger, and the financial crisis had happened right around 2008. So I figured that, it was a solid 6 years, had been enough time, and the firm wasn't known as Lehman Brothers. I think if it still had that name, that moniker attachment, I wouldn't have been as confident working for the firm, possibly because of the reputational or headline risk. But it was a very different firm at that time.
Mm-hmm.
And so moved to Chicago to run Neuberger's kind of Midwest institutional business development effort. And then from there was recruited by Vista to come over and focus on helping Robert to raise additional assets from investors. And that's basically how I got to Vista. So I've been at Vista now since about 2018, and it's been a wonderful experience so far.
Yeah, that's amazing, man. Kudos to everything that you guys have done. It's good to see, people like us not, making money in business and not, just on the entertainment side of things. Why do you think you were able to constantly elevate in your career? Because it seems like, of course you went to Duke, so obviously you're a very smart guy. You went to Howard. So, but after that, it's always important to, obviously have a great reputation, but you were getting recruited for your next roles from what I'm hearing you say. It wasn't like you were going out and just looking for these opportunities. What was it that allowed you to keep elevating your career?
Yeah, it's another great question. I think maybe a couple of things. I mean, like anything else, Josh, I think we all have a very high need for achievement, right? You
Mm-hmm.
can't go to Howard without having that spirit in you about you, right? And so I think a lot of it was really just about hard work and trying to make strategic and thoughtful decisions, and really putting forth a lot of energy and effort into my career and building my career. And then, I was able to have some success along the way, raising dollars or sales, if you will. In that context, is definitely a contact sport.
Yeah.
It isn't for everybody. A lot of sharp elbows. You get told no 90% of the time you're trying to do a deal, and so I think as you once you begin to have some success, you think about what's working, what's not working, and you really kind of harness in on that. And that helped me quite a bit. And then honestly, I'd say the other probably the greatest contributor of that success was prayed a lot. And I had really good parents who prayed a lot, and really were very supportive and helping me to effectively harness all my talent and bring it all to bear, as we all do, in various capacities. And I think that was certainly a major factor to whatever success I've had so far.
No, that's awesome. That's awesome. So now you're at Vista Equity Partners, and that's if I'm getting this title correctly, Capital and Partners Solutions Engagement. So
Yeah, pretty much.
what exactly does that mean for the layman?
Yeah, so at Vista, it's important to kind of understand what the firm does, and you sort of alluded to what we do during your opening or your introduction of me. Effectively, as you talked about, Vista Equity Partners is one of the largest and most successful private equity firms in the world.
Wow.
We are focused on enterprise software and technology-enabled businesses. Robert Smith founded the firm back in 2000. He started off with about $1 billion, and we are now today about $74 billion in assets under management, which I think would be large by any standard, but particularly in the private equity space. I think what's interesting about Vista is currently we own, as I mentioned to you before, we own about 65 software companies across the world. And it's interesting, Josh, because if you were to sort of add up all of those companies into one, Vista as a holding company winds up being the fourth or fifth largest enterprise software company in the world. We have over 70,000 employees. We have over 12 million users of the software that we create. And so just a massive, massive scale and ecosystem, I think, in that context. And so part of what we do, a big part of what we do, is we will go to a pension plan like Texas Teachers or like Howard University, who's a client of mine.
Nice.
And we will say, listen, I know that you want to have money to put to work in the market. You want to generate a very attractive rate of return. We are returning 30% IRRs or return back to investors. We've been doing that for the past 20 years, or also 3 times our money. You give us $1, we give you $3.50 back, over and over and over again. And so I go out and I raise money from those groups, and they then trust Vista to then put those dollars to work into investments. And then the other part of what Vista does is we have a very strong operating model where we effectively take those software companies once we meet them and really engage in something that I describe to be as an engineered value creation strategy. And that's how we're generating the returns that we have for investors. And so my part, again, in all this is I'm going out and talking to the large investors of the world and saying, we'd like for you to give us money to then invest on your behalf into the software companies that we're buying. Does that make sense?
Okay. So if I'm getting this right, you're going to these large institutions that have pension plans or just
billions of dollars in their pension plans, because
okay.
you can't put all that money into a checking account, right? It's got to earn interest. So firms like Vista, you probably have heard of, obviously, firms like BlackRock or Carlyle or Goldman Sachs or JP Morgan. We are all effectively money managers of this very, very large amount of capital.
So those would be your competitors?
No, not exactly. We do have competitors in the space that we operate in. I'm just giving you an example of these are, like us, we're in the asset management business or industry, and it's our responsibility to be very good stewards of that money and invest it wisely into, hopefully high returning investment strategies, and then return that capital back to investors. So I go out and I basically pitch our investment capabilities to institutional investors all day long.
Okay, so you'll raise the money, and then somebody else that's at your firm will invest that money once you.
That's correct. Yep. Okay, that's exactly right.
And you guys have been able to basically return about 20% year after year, is what I'm hearing.
Yeah, and actually north of that, about 30%.
Wow,
since
30%, and that's
since 2000, and that's an annualized return. So. Wow. We are very good at what we do.
And so a lot of times these large institutions, they don't even want a 30% return, right? They want something a little bit less. Everybody wants a 30% return, but sometimes, 5%, of $1 billion is still a ton of money. But when you get 30% back, that's,
Yeah, well, I would say that investors, by and large, certainly desire to have high returning investments. Typically, the way that it works is not every single asset class is going to return 30%. Some asset classes or some investments that investors will make may return 2%. Some may return 5%. Some may return 0 or negative, or the return could be negative. And so I think the reason that investors invest in private equity, which is what we do, is because they are hoping to achieve a premium above what they could normally get if they invested in the stock market. Does that make sense?
Absolutely.
So for instance, if you think about an investor's portfolio construction, they know that not all investments are going to produce 30% returns at any one time. And so they say, well, let's assume that I want my portfolio to net a 10% return every single year. Some of those investments have to be high returning strategies and 30% land. Some investments are going to be kind of in the 2% range, 1% range, depending upon the asset class. And hopefully blended together, I will achieve something above my 10% target. That's generally how people think about it.
Very nice. So what's the difference between private equity and venture capital?
Yeah, that's a great question because it's often, I think those words are used, the lexicon is used kind of interchangeably. So it's all private equity, and all private equity means is dollars that are being invested into private companies, not public companies, right? So we're not, I mean, we may own a company before it goes public, but once we invest in the company at that moment, it is private. Typically, sometimes we'll take a company that's public to private, but either way, it's really a private equity investment. Within private equity, you kind of have a couple of different categories. One is venture capital, and venture capital is what we call kind of early stage investing. And this is when you think about the startups of the world and you think about people investing in a new idea or a yet to be proven technology or possibly a healthcare solution or product, you tend to attract investors who are willing to invest money in that idea at the early stage. And that's really called venture capital, hence the name. Mm-hmm. It's a brand new venture, right? Okay. We're beginning this process. We're not sure how it's going to turn out. We hope it turns out very, very well, but we're not 100% sure. And so it's called a venture. It's really describing the stage upon which you invest. We do something called buyout private equity, which means that we're investing in mature software companies. The average age of some of our portfolio companies typically is 10 to 15 years. They've been, in business in 10, 15 years, and we have actually come along at some point and said we'd like to make a investment in this company and buy the company for control, and then take the company over and do our work.
Wow.
And it's very similar. I mean, I even use this analogy with our investors sometimes, but think about it as if you were buying a home and you were asking yourself, okay, well, can I make 3 times my money in this home, right? If ... And that part is called value creation. So you may buy a new construction home, and there are different nuances with a new construction home in a nice neighborhood. Or you can also buy an older home and fix it up. We buy older homes and fix them up, and then we sell them for a profit. Again, I'm just giving you an example around, because it really conceptually is almost the exact same thing. Again, conceptually. I'm definitely simplifying the example, but I think at its core, we're finding assets that are mature, that we like. We are creating value in these companies, i.e. we're finishing the basement, right? We are de-risking the property by changing the roof out. We may decide to redo the kitchen. We may decide to extend the square footage on the back of the house. We may do a number of things to create value. And then once we've done our work in that home, we then sell the home. That's very different than buying a new construction home where we're hoping that this neighborhood will just increase in value without us doing anything to it. We don't do that. We do what I just described before.
So when you get these businesses, are you kind of like changing like their management as well, and basically turning them around? But they may already be profitable, but you kind of look at their book and you say, well, if we tweak a few things, we can take you to 3x to 10x over the course of time.
That's exactly right. That's okay. Exactly right. Some of the businesses, may not. I think, what Vista has done a really good job of is knowing how to operate, software companies and understanding really how to create value. We have a series of best practices that we've been cultivating and creating since the firm's inception. And we've gotten really, really good at knowing how to market software companies, or knowing how to work on product and technology roadmaps, or doing a really good job of making sure that the code is as efficacious as it should be, and building a competitive scenario kind of around that. And so the point is, those companies may not be broken, they just may not be as profitable as they could be. And so again, we're not buying a house that has burned down. We're buying a nice house in a neighborhood that can benefit from some lipstick and rouge and some other things. And so that's what we're doing.
Welcome to the Go Fish Village podcast. As a Chinese proverb says, give a man a fish and you feed him for a day. Teach a man to fish and you feed him for a lifetime. At Go Fish, our goal is to teach individuals just like you how to build wealth through real estate. How have you been able to succeed as a black man in this space?
Yeah, that's an excellent question, and there's a lot to kind of unpack in that. Let me just say, I guess, a couple of things, because you're right. Private equity, Wall Street in general, but certainly, and then financial services, but certainly in private equity, has been a very sort of narrow universe for African American professionals to engage in. It's just, unfortunately, has not been. We don't have the numbers en masse. There are a good number of us, but just not nearly as many as there should or could be, which is part of what we, in addition to what I do, we also work to try to create an opportunity or a path for people to understand about private equity, because it is a very, very fulfilling career path for sure. And oftentimes when I go into these client meetings, unless it's, for a public pension plan in, let's say, Houston or Detroit, I am usually the only African American in the room ever. And so the people both who I'm pitching to, whether it's a chief investment officer at a large pension plan or somebody who is responsible for a family office, that family office could be $7-8 billion in terms of its size. Even if I'm in a competitive situation and I'm competing against other firms, the other team that's sitting on the outside of the door as we exchange, greetings, if you will, is usually not African American. So I will submit that and agree with your point around that for sure. I think in terms of, thinking about that dynamic, and it is competitive for sure. I think a lot of it has to do with preparation, but then a lot of it has to do with like where you're from. And you know this, right? Growing up in the South Side of Chicago, right? I'm from Miami, from a very similar neighborhood, but in Miami, Florida, is the South Side of Chicago. We both went to Howard, right? And so I think, interestingly, African Americans, our core values, our sense of hustle and grind, our sense of an inner strength or confidence, or even swagger in some cases, is actually a very strong positive. I think the other aspect that we don't talk as much about is, at least I certainly feel this way, but if you look around and you don't see many folks who look like you, that develops a little bit of an edge, if I'm being honest.
Yeah.
That develops, I don't want to call it a chip on your shoulder, but it's kind of a chip on your shoulder. Mm-hmm. You can kind of snack on all throughout the meeting mentally. Do you understand what I'm saying?
I like that.
And I think a lot of that is actually very, very empowering. Mm-hmm. And knowing that, if I think about my parents, for instance, and my grandparents, all of which are deceased at this point, and I think about the sacrifices that they have made to get me to where I am today, the things that my parents did, the trouble they kept me out of, the investment in time and energy that they made in me and my sister and my career, and giving us as many options as possible when it didn't probably seem like there would be, many at the time, things that I don't know, I didn't know about then, that I know about now as an adult and as a father myself. I think about those things, and I, like you, I stand on the shoulders of giants in my family. And so when I'm in meetings with people and I'm competing for a piece of business, whether it's going against another firm or being on point to do my thing, I kind of look at people and I say, yeah, of course I'm going to win.
Yeah. Is there a sense of pride working for or working with one of the wealthiest Black men ever, or Black people ever?
Yeah, I think it is ever, as I think about it now. Yeah, it has been a phenomenal experience working for Robert. Robert Smith, if you don't know a lot about his story, was born in Colorado and raised by two educators. Came from a middle class family. Very similar to how you and I were raised, or at least to some degree. Parents again were educators. They didn't really come from a significant amount of money. They didn't work in the industry, but they recognized a very strong talent and gift in Robert's intellect. And Robert really harnessed that and did very well early on. I mean, he went to Columbia Business School. He went to Cornell before that, engineering mind, then went on to Goldman Sachs, and then really kind of built his business from scratch that way. Mm-hmm. And so it is extraordinary working for someone like that. I think along two fronts. One, it's just incredible to engage, to your point, to engage with someone who has had that much success in life. And Robert has had a ton of success in life. So to have these conversations and to get into the gears of how Robert thinks and how he processes information, decision-making, door number one versus door number two, his assessment of people and talent and processes. It's just, for me, it's really, really interesting to have a lens into someone who is like Robert, like an Oprah Winfrey, for instance, or other very successful people. That's been fascinating, at least from my perspective, for sure.
Yeah, that's got to be amazing. I mean, every time you go to work, I mean, you're pretty much being you're part of history. I mean, once he made that donation to Morehouse, I feel like he became a household name. I mean, everybody, if you follow finance, of course, you knew who he was. But once, anytime somebody says, we're going to eliminate everybody's debt here, it was like, man, I should have went to Morehouse, man. I mean, that was.
No, you shouldn't. No, you shouldn't.
So what have you learned about wealth creation in your journey to Vista?
I think kind of two things, and this didn't hit me right away. So I never want to pretend like I suddenly have all the answers, because I do not. I'm learning every single day. But the thing and we never really talked about wealth or money or wealth generation or money in my household. We just, we didn't grow up that way. I think most African-American families do not. Mm-hmm. Conversely, many other families do. And you kind of get that as you get older. You're like, oh, okay, so this person, like when I was in business school, I was like, oh, you have what kind of investment? And you're doing what? I'm like, how did you find out about those things? Like, where did you get exposure to those types of things? And so I think, what I have learned is kind of a couple of things. I mean, besides how to think about money and investing and how to be thoughtful and judicious with your decisions around saving money and putting money towards, investments in certain causes. I think one of the biggest lessons is to try to train your brain to expect it, which is hard to do. It's hard to expect that you're going to, at some point, be wealthy, or at least have wealth to then do something with it and then share with others. It's hard to have that expectation, but many of our counterparts do have that expectation. So they're already starting on second and third base in some cases where we're beginning sitting in the bleachers, if you will, just because of a mindset, you know? And I think that's really important. I think the other thing that's also really important is to educate, to point number one, educate yourself about money and finance. That's something that's never really going to go away, right? You're always going to have financial considerations to think about, whether it's having good credit, whether it's making sure you buy your first home the right way, whether it's saving for your retirement, whether it's investing in a business and multiplying your wealth. Financial considerations will always be with you. So you may as well try to maximize them as much as possible.
Yeah, I mean that's I've always wondered, because before I was an insurance agent, I taught entrepreneurship in high school for high school kids. And I
Yeah.
always wondered why like financial literacy wasn't taught at in elementary school. Not saying that kids have to be investing in the stock market, but just basic things like budgeting, the rule of 72, compound interest, just wondering why that was never, you know, stressed at that age. Um, I have a question
Yeah.
with COVID.
Sure.
How did that? Because I'm thinking that in your business, relationships are like, it's a relationship business. Even
Sure.
though 30% a year is great, but relationships do have to come into play to
Oh, very much
maintain,
so. Yeah.
to maintain everything. How did COVID affect what you do? Are you having meetings face to face? Are you on Zooms? Because it seems weird talking about billions to somebody on a Zoom call. I kind of want to look at you, and all of that. How's it affected your your business, and then also how has it affected you all's portfolio?
Yeah, I would say I'll take the first question first, I guess, in terms of its impact. So ordinarily, like I run our, I guess what's described as the Midwest business development effort for Vista, which means that I typically, before COVID, was traveling just about 4 or 5 days a week.
Wow, 4 or 5 days a week.
Yeah, I would
That's
leave on
tough.
that is tough. I would leave on a Monday morning early, 4 o'clock car for a 5:30 flight to O'Hare or at O'Hare. And I wouldn't come back until Thursday night at 9 or 10. I kind of spend a day or so at home. And then by Sunday, I'm, packing the bag, thinking about my next trip. And I would do that pretty much 4 or 5 days a week, or I'd leave on a Sunday. So there was a lot of travel involved. And I'd be going to different states, Texas, Minnesota, Nebraska, Kansas, all those, wonderful Midwestern states, Michigan. And so it was very much a in-person, person-to-person engagement where I'd be in a room with a bunch of people and presenting, the different investments or whatever. And so you're right, it is very much a relationship business. And then when COVID hit, all that obviously stopped. There was no more traveling. It was about phone calls and Zooms. And I think initially it was kind of odd conducting business through this medium, this exchange. And then all of a sudden, I think as we got deeper into COVID, I think folks recognize, hey, look, the world is not going to stop. You need to continue to get stuff done, both in terms of what we do, but then also my clients. And so there was this kind of mutual recognition that maybe we can, allow for transactions to happen in this context. And maybe we can continue to stay very engaged with each other and as personal as possible without being actually in person. And then it really, so that was so phase one was like, it's kind of weird. Phase two is we don't really have another choice. Phase three, which is kind of what we've been in for at least the last 7 or 8 months, has been extraordinarily productive. So where I would used to have to fly to 3 different cities per week, on Zoom, I could theoretically hit 5 or 6 cities in a day.
Yeah.
And I'd be behind these, again, doing these Zoom calls, and engaging with investors, and it's been working. We've been able to raise a lot of money during this period of time, some of which I have, in full disclosure, there are some new investors who have joined the firm or given us money recently who I've not yet actually met in person. I've only met them or seen them through Zoom. So anyway, so I don't think we'll be like this forever, but I certainly think that I think that the model will certainly change, I think, going forward. From a business perspective, I mean, it's been one of the most, and again, you don't want, COVID to be part of the reason, but the reality is, if you are a technology business.
I was just gonna say that. I mean, this is because I was looking at your portfolio. I'm like, wow. I'm like, tech is leading the market right now. I mean, since March,
It is.
if you
Yeah, it's and you think about we're in the enterprise software space, and so our companies are ones you don't typically hear about because they're not consumer focused, but they are the kind of companies that somebody within a specific industry would go in and use every single day to do their job. Or, like, for instance, we own a company called Central Square. Well, Central Square is the number one software behind the 911 operating system.
wow.
Or we own a company called Granicus, and Granicus is the number one gov tech platform. So all these municipalities, whether it's Cook County, whether it's
Dade County,
municipalities in Los Angeles, Dade County, where I am, any municipality that's engaging with their citizens about paying tickets online, what are the COVID numbers in my zip code, whatever, all run through Granicus. So think about that in this process. So we have 65 of those companies like that have proven to be extremely resilient because they are so mission critical to their end user, or like the end user function. There's a company we own called Power School.
Man.
And Power School is the number one educational platform for K through 12 schools across the country. We own part of Power School is something called Schoology. Well, my daughter, who's doing all her schoolwork online, uses Schoology every day to do her classwork and her assignments, and her grades and her test scores are basically all kept within our software. So that's what I mean by mission critical enterprise software solutions. So in that context, this past year has been one of the best years on record for our firm.
So do you know all the companies that you guys are invested in? Do you have to know a little bit of like everything about all these companies?
Yep.
Wow.
I do. I mean, again,
that's pretty cool. I said that's pretty cool because it's, it's kind of like, like we were having a conversation a few weeks ago. I was like, man, how come folks aren't having these conversations? So it's like, I'm sure you know who the LeBron James is in the portfolio, who the Kyrie Irving is, as well as, who the Dickie Simpkins is, and who the Udonis Haslem is in the portfolio.
Oh man, that's great. That's a great example.
So that's
we would like to think they're all LeBron James, but I get you. I get your point.
No, so how do you find these companies, and like do they come to you like, please help us, or is it like, hey, hostile takeover, baby? Hey, what you want us to compete with you, or you want to get bought out? Like, what's up? Like, how do you find these companies?
Yeah, it's simply through a variety of ways. I think there's both kind of a direct outreach effort that we've been doing. And remember, we've been in the business for going on 21 years at this point, right? Actually, over 21 years, given when it was founded. And so we have built an amazing reputation over that period of time.
Mm-hmm.
And we've effectively only kind of done basically one thing. We haven't been, this month we're going to go and do janitorial services companies. Next month we're going to do energy. It's all been enterprise software.
Man,
the software companies that have been around for a while very much know who we are. And then newer companies that we haven't really engaged with before have also heard about us, our reputation. And so that kind of creates a really interesting dynamic where we are certainly actively going out and meeting. There's someone like me, for instance, who reaches out to software companies and tries to develop a relationship. Let me walk you through how we think about value creation at Vista. Let me walk you through kind of what we're seeing. There's someone that does that, but for software companies, and that's kind of a very strong and important sourcing component. And then, yeah, I mean, again, being kind of who we are in this ecosystem, our size, our returns, the fact that we've generated so much money on behalf of founders of software companies, and they've they have done better by having Vista buy the company again, buy the house, improve the house, and sell the house. Wow. Than they would have on their own. That just creates this interesting kind of flywheel effect, and we get a lot of activity that way as well. So I'd say outreach, and then also people do come to us and say we'd like to consider working with Vista in some way.
Man, do you ever pinch yourself like, man, I can't believe I'm having you're at the table of like, this is history. Like, do you look back like the fact that Robert was able to come up with a software company at like the time when there's like an internet boom or whatever you want to call it, when everybody's trying to come up with the next .com, he's like, I'm trying to figure out a way to buy and take your .com thing to the next level and find investors. Because it used to, like, real estate used to be a safe play for, I guess, private equity. Now tech is like, I don't want to say super safe, but the returns you guys are getting are crazy.
Yeah, it's been an amazing journey, and I think what's been interesting is you think about kind of where you are in life, Josh, and you kind of think about the the things that have occurred or happened to you that you participated in, et cetera, that have led to like that moment. And I remember when I first joined Vista. I said to myself, I'm like, boy, am I glad this is now versus like 10 years ago. Because I wasn't quite ready. I wasn't ready, Really? There were some experiences that I've had professionally, even in the past several years prior to joining Vista, that have really helped me out quite a bit. And so while I would have loved to have worked for a firm like Vista, I think it's important that people recognize that there's value in the journey that you're on. And it may not always be as self-evident until later, but you should try to appreciate the process, and you should try to think about that from like a learning context. And as I think about the different jobs that I've had, GE Capital being a Six Sigma, black belt process improvement person.
Wow.
To working in the private bank. I even had a job where I was working in a warehouse before business school. I was managing a big team of people, and it was a very distribution, engineering oriented type of job. That has contributed to, what I bring to the table now at Vista. My internships at Howard, one was in sales, one was at in advertising at a firm called Leo Burnett in Chicago. And interestingly enough, I used to, when I was doing that internship, I said to myself, wow, I'd love to come back to Chicago and live at some point when I get older. Well, sure enough, I came back to Chicago, and those experiences I have honestly have drawn upon. Like it gets embedded in your DNA a bit. And so, I definitely appreciate all of those experiences to at least allow me to continue my journey here at Vista so far. It's been great.
That's awesome. So Howard, tell me about your Howard experience. You said you came in, it was the late 80s?
Or almost.
Well, no, you graduated business school in 2002.
Yeah, that's okay. I finished in I finished in 95, so
right,
call it early 90s when I went into Howard.
What was Howard like? back then coming
Howard
in?
was, I mean, it still is. It's just obviously, the like the core values of Howard have obviously remained the same, right? It's just a phenomenal institution and place for growth and development and friendships and fun. It was just like that when I was in school. In fact, I mean, I let's see, I came into school in 1990. I was on football scholarship, so a lot of what I was
Oh, you
doing,
played football?
I did. Yeah,
Oh, what position?
defensive end and outside linebacker.
Nice. Now you played all 4 years?
I played 3 years and couldn't play my last year because of an injury. But the last year I played was that 11-0 team
Of course it
that
was.
going out with a bang, so to speak, was cool.
Nice.
So a lot of my initial experience was being a student athlete, and but I had a phenomenal time. I had so much fun. I was just enjoying the experience, the people that I was engaging with, and living in Drew Hall, and the practices, the games, and like the going up to Georgia Avenue and doing everything. Howard China, I don't know if they still have Howard China, but Howard China and like all these other places. These spots that we used to eat at, we probably shouldn't have eaten that, but whatever, it is what it is. You're in college, you don't really have much money.
Yeah.
That experience was incredible. I mean, I was enjoying it so much that like every year I would say to myself, my gosh, I can't believe I still have 3 more years of this. I still can't believe I have 2 whole more years. I can't believe I have another year, because I was almost, talk about pinching myself and waking up. Howard was that experience for me, and it's something I sit on the School of Business's board of directors now,
Nice.
and board of visitors, and it's just, I mean, it's great being in that seat, of course, and helping Howard and the School of Business think about the next 10, 15 years. Where do we continue to recruit great students? How do we provide them with continue to provide them with exceptional experience, create opportunities in finance and banking and private equity. It's really kind of come full circle to me being on that board. And so it's just it was just an incredible experience. And I'm going to try to get my kids to go to Howard. I got 2 kids, Gigi and Harrison. Gigi is 9. No, she's 8 and some change. She acts like she's 18, and my boy, Harrison is 5. And we were going to go to homecoming last year, but of course, COVID happened, and we're definitely going to go, this year. But my uncle went to Howard, my sister went to Howard, my cousin went to Howard. So
Really?
Howard runs deep in
Nice.
my family. Yeah, for sure. And I think if you ask my uncle, who went to Howard many years before I did, but he stayed up in Drew Hall. Then he also I think he lived in Cook at one point. He did SLO. I don't know if SLO Hall is still open or not. I mean, obviously the dorms have thankfully been upgraded and changed. But the essence of what Howard, is now has always been that way for many, many years. And so my experience was incredible at Howard.
What were you involved in when you were at Howard?
So I played, like I said, football a lot. I did. I was involved in the School of Business for sure. I couldn't do things like, campus pals.
Oh yeah, I was a pal.
Yeah, that's a great experience. We had a lot of great times with the campus pals, at least when I was there. Didn't really get a chance to pledge, and the reason I didn't do some of those things, unfortunately, was because when you play, I mean, obviously,
pledging football.
Academics were like, very, very important to me. And I knew, I mean, I didn't go to Howard to play football.
Mm-hmm.
In fact, I didn't start playing football until pretty late in my life. Like I didn't play until I think like my junior year in high school. And, I'm a kind of a big guy, and was pretty good at it. So I had a number of scholarship offers, but it wasn't going to the pros was never a destination for me, or at least not that I was thinking of. And so I knew at some point I would have to get a career and work hard, and I wouldn't I wasn't thinking about going to the pros. So anyways, backing into that, if I wasn't playing football, I was spending a lot of time studying, keeping up with my grades, which I'm glad I did. But in between all that, I had a really good time. So yeah.
What do you like? Do you ever hear people say stuff like, because I know when I went, I'm not gonna say when I went to Howard, but when I remember coming back from like my Christmas break at Howard or whatever the first break was, and I had friends that went to like Big Ten schools, and they're like, "Oh, why would you go to a HBCU? You know, the world isn't black." You know, what do you say to people who say stuff like that?
Well, so first of all, I would say that, and I used to say this in business school. Remember that chip on my shoulder? I used to eat all the time. I
Yeah,
used to snack on it. But I remember saying I used to have conversations. I mean, I would be, in the hallways, and these other students would, some of them had gone to Cornell undergrad, Michigan, I mean, you name it, right? Yale, had a couple of Stanfords in there, some Dukes kind of mixed in there as well. And we'd be talking about our backgrounds and our experiences. And I'm like, oh, I went to this school and I did this, whatever. I'm like, yeah, I went to Howard,
yeah.
and yet here we all are.
Here we are. Here we are in the White House at
Enough said,
at
right?
at,
It's like,
at
yeah,
Vista.
here we all are doing the exact same work.
Yeah.
And if I'm being honest, I think I got a better score that last test than you did, but I'm not gonna raise that though. Just
Right. But who's counting?
exactly. But I guess my point is, I mean, look, I think going to Howard is a complete win-win, right? I mean, I think number one, you get a phenomenal education for sure. And then your experience on top of that is also phenomenal. And it's unlike any other experience that somebody who went to, say, a majority school probably wouldn't experience.
Yeah.
So if anything, it's basically like, I mean, if you think about it, I mean, it's like you're getting a 2-for-1, right? And then of course, if you decide to go on to business school, if you decide to go to law school, if you decide to open up your own business, have your own insurance company, you are equally as prepared. So
Yeah.
I would look at that and say, why didn't they go to Howard? Right? Because if
Yeah.
you knew what I knew about my experience, right? If you knew kind of where we are in life, I feel like Howard grads win big time because again, you can't duplicate the experience, and then it isn't like I feel like I'm somehow lacking. What I will say, and again, we're trying to work on changing some of this at the School of Business, but I will say that when I went to Duke and I started working at JP Morgan on Wall Street, I remembered that some of the other students seemed a little bit further along in some of the financial lexicon or prep that I think I had. And that wasn't necessarily a design point around Howard as much. I think culturally, some of those kids, again, grew up with fathers and mothers who were in the industry and kind of picked up things as they got older, or maybe had an older brother or an uncle who was also in the industry. And so they sort of got some of that way. And I think, from a banking and private equity standpoint, there are a number of us, Dr. Wilbon, especially at the School of Business, who are trying to kind of close that gap a bit in terms of just overall preparation. That's it. Not saying that we don't have students who can't compete, not saying that we don't have students who aren't at the top of their fields and who will continue to be so. It's just a different level of preparation while you're at the undergraduate level that we're trying to incorporate that I think some of the other schools do or have been for years. And we're catching up. I used to tell folks like, listen, you're not better than me. You've just been doing this longer, but
Yeah.
I'm coming for you.
No,
Right?
that's a good point. Excellent point. I mean, I think now that we see you see more people investing on Acorns and these other platforms, and it's kind of become a little bit more popular, even though people might be losing their shirt by putting money in GameStop or, whatever else. At least you're kind of learning some things. Cause I know when I was in college, stocks was just like a rap lyric. It really wasn't something that I was actually doing. I probably thought that you probably had to have a ton of money to do those. So how do we get more Julians, Robert Smith, Jim Reynolds, John Rogers? How do we
Boy.
Melody Hobsons? How do we get more of these folks into PE, or at least, like you said, having that good fundamental understanding of what private equity is or venture capital, so that, because sometimes we may be good at these things, but we don't even know that they exist until we're like 40
Exactly.
years old. And by that time, it's too late to compete with somebody that's 21.
Yeah. I didn't discover private equity, what I'm doing, until very late in my career, much later in my career, frankly. I mean, that is an exceptional question and quest, and something that I think we should all in our industry, it's incumbent upon us, the folks you mentioned for sure, myself, my colleagues, folks I went to business school with, who are African American, folks I went to Howard with, et cetera, to really do as much as we can to expose the next generation of students to this type of career, at least this type of career path, if you will. There's actually two things. One is a general increase in financial literacy across our community. We should be talking about stocks and bonds and investment portfolios in churches, for instance, or in community centers, right? It shouldn't be until you graduate from college that you understand what a stock or a bond is. I'm just saying, theoretically, like those concepts are not very difficult to understand once you have somebody to take the time, to explain it. So I do think that there is a cultural shift that needs to continue to happen across African American population, and I think that's happening. It's unfortunately slower. I mean, we do a lot of stuff at Vista to help with that, but I mean, it's we just all have to do more. It's one of those things, like more. And then I think in terms of helping the future generation of the folks you mentioned, who, by the way, it's an exceptional class. You just talked about the Jim Reynolds of the world and Melody Hobsons, et cetera. I think we just have to try to increase the exposure to these career paths and these options sooner in undergraduate careers. And we're doing that. We just have to do more, I guess, is probably the point. And so the more of us that kind of get into these businesses, the more of us that, focus on giving back by training, recruiting, providing opportunity, making aware, creating awareness for people. The more we do that, the more, hopefully mainstream some of these career paths will begin to feel, or less foreign, I should say, because it has been a extremely rewarding career path. Not only for me, of course, but especially for the folks that you mentioned.
Would you say financially rewarding? I think that
I almost thought you were going to ask me that. I was like, man, I think he's probably going to ask me. It has been. It has been.
I think that,
Josh, it has been. Like, I mean,
seriously, like my roommate from Howard, we're roommates for 3 years at Howard. Okay. He went to Harvard Business School, and I remember being at Howard, and you have friends like, oh, I'm gonna be a lawyer, I'm gonna be a doctor, and they actually became those things. Yep. You know what I mean? And then I had people say I was going to business school. I just paid it no attention. I'm like, yeah, why would you want to go to extra school? Like, So then I had these friends, they go to Harvard, and they go to these top business programs, and then they go from like making like 70 grand, to like coming out of business school making like 250, 300. I'm like, hold up, man. And then they on Wall Street, like you said, and they're getting exposed to these different things. I think that a lot of us, just like sports, kids don't know where sports agents are until way too far after that basketball dream is done. I think it just needs to be that exposure. Like, hey, here's what I do. Here's how I make money. You can do the math on your own. You know what I mean? And they're like, oh wow.
And I think that's another interesting point because I mean, it's, in finance, it's about money. I mean, it's very much a meritocracy, right? It's like the people who are smart and accurate, precise, work hard, tend to do very well. And we work in an industry that happens to be an ecosystem that generates a lot of money.
Mm-hmm.
And so you can, I won't say easily, but it is a very, very plausible notion that by the time you get to be in your 30s, late 30s, you're making millions of dollars a year.
Oh, don't tell me that, man. I'm about to throw up.
That's not everybody's experience.
No, but that's
saying to you that.
No, I understand what you're saying.
And so the only point I was going to make is, and maybe that's, part of the starting point. And look, there is, I mean, other jobs like accounting and, supply chain management, and like there are some great career paths, right? That provide, they're very rewarding, right? And also require all of you, right, to deliver the best kind of, performance for yourself in your career. So this is not to diss any other career path, because I wasn't on this finance path until basically after business school. But I will say that the difference between what you could earn in a career on Wall Street or private equity or whatever can be exponentially more than other career paths.
Yeah, I have friends that work in PE, and they always say this thing called carried interest or something like that they like to throw in my face, and I'm like, what is that? But but yeah, so
that is a very real thing, by the way.
So if I want to get into PE, I'm a young guy, young girl watching this, and a lot of us we come to college, we don't really know what we want to do.
Yeah, here, same thing.
But maybe I'm reading about PE. How do I get into it? Did you have to have special licenses? I mean, what are some things that you need to be doing in terms of maybe soft skills, or what things should you have on your resume, or what organization should you join to get on this path to being the rainmaker?
Must be describing Robert. Let's see. I mean, I think, there are some notable paths to, and not just private equity. Whether it's banking or like other financial services, typically the entry point is through school, right? I mean, it's through undergraduate, and then it's also through an M.B.A. or business school program. And generally, we, not just Vista, but other firms, frankly, look for students who have demonstrated that they have the ability to excel in their classroom work and do very well. We look for very well-rounded people.
Mm-hmm.
People who have done both well in school, people who may be student athletes, people who, have, maybe they work part-time, or maybe they do something in student government, but kind of just, really well-rounded people. And like everything else, it's a curve, right? I mean, there are people at the top of their game, and there are people who, aren't quite maximizing their potential. And so I would start by saying that regardless of the school that you go to or the major that you're in, you need to be in a situation where you are performing at your top level at all times.
Wow.
It's very difficult. I don't know many people who, if I know any, who have C averages and are able to break into some of these investment firms. I just don't. It isn't the culture, right? It's just they typically recruit high performing students. So whatever it is you're doing, do it very, very well. Crush it.
Man.
I'm sorry?
I said, man, sounds like a true finance guy. Whatever you're doing, crush it. All right. Now talk to me. Talk to me after you've crushed it. Then you can call me.
Well, I'm being honest. I mean, it does,
Yeah,
you should do a great job with whatever it is you're doing. And then I think
absolutely.
if you major in business and finance or accounting, there's certain majors that tend to be attractive to, analyst programs, right? JP Morgans of the world, Goldman Sachs of the world that will come into the school and recruit you to join their analyst program, or maybe do an internship as an analyst over the summer, so you get your feet wet, whether it's sales and trading, investment banking, private equity. That's really the on ramp, and then kind of from there, it's like anything else, it's more of a trajectory. Did that internship turn into a full-time offer into the analyst program after you graduate? And you join the analyst program after you graduate, and you do really well. You get promoted to associate, or maybe you get fired.
Mm.
If you can promote to associate, do they sponsor you to go back to business school, or do they not? Do you go on your own? Possibly. If you do, you graduate. Did you do well at business school? How were your grades? Were you a finance focused? Yeah, so there's a litany of things that typically that has been the traditional path that has led people down this career path of being in the financial services industry. But I would say usually 10 times out of 10, the industry looks for individuals who have, who've done very, very well in school.
Welcome to the Go Fish Village podcast. As a Chinese proverb says, give a man a fish and you feed him for a day. Teach a man to fish and you feed him for a lifetime. At Go Fish, our goal is to teach individuals just like you how to build wealth through real estate. How do we, get money for Black-owned startups? Or what advice would you have for maybe an up-and-coming startup entrepreneur who wants to get funding?
Yeah, that's just historically, and Robert talks a lot about this idea of like the black banking capillary system, and how African Americans businesses have been underbanked, or communities certainly by and large, and I mean everything from like barbershops to hair salons to like all kinds of African American businesses communities have been underbanked for some time. I think what you're seeing is, and unfortunately on the heels of the George Floyd, incident, and others that have, I think, have really shaken mainstream America in a way. And then you look at the proliferation of like information, how it gets shared across social media. I think one is that we all know a lot more than we did before about information. You know these stories and hear these things that happen. And so people tend to react more acutely than they have previously. Or you have people with cell phones and you record things and you put it on Instagram, or you email it around to people, and people are typically shocked. So I think there's been, if I think about like JP Morgan, I think about some of the traditional, Bank of America, I think about those institutions. They are doing, based on my contacts, they're doing a much better job of engaging with, reaching out to African American businesses, and then even more specifically, providing capital for Black banks in communities that touch us a lot more frequently than there was before.
Yeah.
So I would say two things. One would be go ask for money right now.
Yeah.
Go ask for money. I believe that I think this environment feels to me a bit more fertile in terms of African American businesses and their ability to get better funding. We did some of this we saw the disconnect between these Black businesses and banks not getting all the PPP money that they were supposed to get, et cetera, PPE money, they were supposed to be earmarked for, and having to really kind of go in and re-engineer that process. But I would say, number one, continue to ask. Number two, make sure you're tight, right? mean, no one's going to give you money just because you got a Black-owned business. They're going to give you money when they see that you have your accounting stuff taken care of, when they see that you understand your market very well, when they think or believe that you have good and strong financial statements, and they know that you have a good strategy and a game plan. Like, it's also incumbent upon, and we know this, Black-owned businesses to, again, perform in a way that wants to attract capital.
Mm-hmm.
Capital is attracted to entities or people or places that it can multiply.
Where do you see the markets going now? We got a new regime in the White House.
It's a good question. I mean, I think overall markets are frothy. I think the Dow, the S&P, and the Nasdaq have all hit all-time highs recently. So you have to be a little bit cautious about that. I mean, am I buying completely at the top? And you have to really understand the fundamental valuations of these businesses and kind of to understand what's sort of expensive relative to historical valuations versus like where we are now in the cycle. I think the pandemic and how the administration continues to roll out the vaccine and get shots in arms and allow schools to reopen en masse and allow businesses to continue to operate successfully. That's going to have a lot to do with how the market continues to scale. I think and also the stimulus that comes along with that, right? So the idea that President Biden, he wants to go big now, because just given the magnitude of what we've been dealing with in the economy because of the pandemic, I think that approach is thoughtful. I also think, and we don't know what it is yet, but whatever his tax policy is for businesses that could encourage additional spending and hiring and growth is also going to make a difference. So, I mean, frankly, I'm optimistic. I mean, the stock market has achieved, again, some all-time highs, and we're just still in the middle of a pandemic. And I don't think that the recovery and the reopening of the country and the world has been fully priced into these valuations. I'm not a stock trader by any means. I'm just giving you my layman's view, if you will. So,
So you can't give me any picks.
No.
Oh man, I was hoping to get some of that 30% year over year. So last question, what advice do you have for the 18-year-old Julian coming into Howard right now? They want to kick it. They want to have that fun, but then they want to get the bag after they graduate like you. They want to go to B school. They want to live in New York. They want to live in Chicago, LA. They just want to, they want to be great and enjoy life. Like what advice do you have for that young man or woman?
Yeah, I would say, man, two big things. It's gonna sound trite, but it is true. Stay out of trouble, and there's a lot of trouble you can get into right now. And I truly mean, because people sometimes will go down a path that could derail where they're supposed to be, and to get off path and then come back is a huge effort. And so don't do any of that kind of stuff. Okay, I tell Julian, hey Julian, like that decision you're about to make that could, not lead to a great outcome, stay away from those things. The other thing I would tell my younger self is to try to figure out what you want to do as soon as you can. To develop a love for the financial markets and an understanding of them earlier. The one thing I hate about private equity is not discovering it sooner in my career.
Wow, you must really love it.
Yeah, I really enjoy it. Yeah, that's my point. So, man, if I could advise him, I'd say, there's this other thing that you probably have never heard of before, but let me save you some years and tell you what this is now, and give you an opportunity to fully engage. I would also tell my 18-year-old self to learn how to code. I would tell my 18-year-old, yeah, for sure. I would tell my 18-year-old self to develop exceptional credit as soon as you possibly can. I would tell my 18-year-old self, I know you're not making any money right now, but whatever money you do have, try to save a little bit, you know? And then I would also say, don't lose, I think one of the, as I think about some of the folks I grew up with, who were in a similar situation that I was, I think, one of the things that I think I did really well and really right, if that's even a way to describe it, was I listened to my parents. I actually listened to my parents, and they've given me exceptional advice along the way. And I guess that'd be the other thing, like continue to listen to your folks. Like, you're not the man. Like, just stay focused, dude. There's lots you have to learn, right? So and I was 6'4", 255 when I was 18.
Whoa.
I probably thought a lot of myself at the time.
Oh man, so it was probably super hard for you to listen to anybody.
It might have been.
I mean, man, okay.
Anyways,
Well, Julian
maybe a little bit too
Bostic.
much for your show tonight, Josh. But anyways, that's my answer.
No, well, hey, you've been a excellent guest. If somebody wants to, I guess, follow you, or
Oh, good question.
or get in touch with Mr. Bostic, the Rainmaker, private equity, venture capitalist, financier. I mean, come on, man.
Not even, man.
The walking bank.
I would tell them I tell your listeners or your viewers just to, get in touch with you.
Mm-hmm.
And if you don't mind helping if anybody ever wants to chat, just putting them in touch with me, that might be the easiest way to do it.
Okay.
I'm not really I'm on Instagram, but I'm not a prolific user of social media. I'm barely on Facebook. I have a TikTok account, but I just watch dancing videos all the time. I have Instagram, but I don't really follow people, and I'm sure I got a couple of followers, but no, so I don't have really a presence on from a social media perspective. But if you do want to get in touch, I would say just to hit you up at whatever your email address is.
Okay. Well, thank you. You've been a wonderful guest. I appreciate your time today.
No problem at all, Josh. Thanks for having me, man. Really appreciate it. Good luck and blessings to you. Keep doing your thing. This was a wonderful night. Really appreciate the interview. I'm going to check out your other interviews as well, because this is great. So I'm glad that you're doing this, and really appreciate you inviting me on.
Absolutely. Thanks. Thank you for joining the HU Movemaker podcast, where we highlight folks that have contributed to the Howard legacy at the highest levels. To hear more interviews or purchase merchandise, please visit www.humovemakers.com.